Hi guys, this is CA Balakrishna. In this video we will be discussing case study number 14. First MCQ. DRPL had kept a condition in front of the exhibitors who were single screen theatres to purchase rights of exhibiting both the movies Hero number 1 to be released on 25th of December and Love Tales to be released on 14th of February. See, basically this DRPL is a movie production company. Now it has two movies to be released. One is Hero number 1, which is to be going to be released on 25th of December, and the second movie is Love Tales, which is to be released on 14th of February. Now they had entered into an agreement with the theater owners stating that right to exhibit Hero number 1 will be granted to the theater owners, specifically to single screen theater owners, only if they also purchase the right to exhibit Love Tales. Okay, now though there was no written document in that regard, some single screen theaters accepted the condition and purchased rights of both the movies. Therefore, the understanding is what type of agreement it is. Basically, this agreement is between movie production company and movie theater owners, which would be a vertical agreement. If it creates adverse effect on competition, it would be known as vertical anti-competitive agreement. Therefore, the answer to this first MCQ is a anti-competitive agreement. Hope that is clear. Next, second MCQ. Regarding DRPL, it can be said that basically DRPL is a biggest production company. Okay, therefore it is enjoying dominant position in that particular industry. That has to be the answer. See, DRPL enjoys a dominant position in the market as it is for quite long time. No, just because of being in the market for a long time doesn't mean that you are enjoying a dominant position. See, in the telecom industry, this Vodafone Idea is in the market for a longer time when compared to Jio, but it doesn't mean that Vodafone Idea is enjoying a dominant position. Okay, so based on this longest time, the presence in the industry for the longer time cannot be said that such company is enjoying dominant position. Next, so this would not be a correct answer. DRPL enjoys a dominant position in the market as its film is a mega star one. No, just because of the reason that the production company is producing the movies with mega star heroes, that can't decide that such a company is enjoying a dominant position. Thereby option B would also be not correct answer. Next, DRPL enjoys a dominant position in the market as it is largest producer in the industry. Okay, option C would be correct answer. Next, third MCQ. In the context of purchase of garage in Nagpur in the name of Mr. Rajan, Mr. Kataria is basically Mr. Kataria has granted a loan of 5 lakh to Mr. Rajan. Okay, now with this loan of 5 lakh, he purchased a garage in Nagpur. Now, since Kataria has given a loan, this transaction cannot be treated as a Binami transaction. Okay, the amount given by Kataria will again be repaid by Mr. Rajan since it was taken in the form of a loan. Therefore, the answer is this transaction is not a Binami transaction. Would be D. Okay, not liable for committing a Binami transaction. Fourth MCQ. In the transaction relating to rap song dance trans, which is the following which of the following statement is correct? See, basically there is a popular hero in the case study by name Mr. Vikas. Now Miss Shaira is a wife of Mr. Vikas. Okay, now what Mr. Vikas does is Mr. Vikas wants to purchase copyright of a particular song by name Dance Trans. Okay, now Mr. Vikas pays a consideration of 5 lakh towards the purchase of copyrights from known sources, but the copyright is purchased in the name of his spouse. Okay, this is the situation. Now if you purchase a property in the name of spouse, it will not be treated as a benami property. There is a exemption to that. If you see, the correct answer should be option D. Transaction is not benami, but the answer provided by ICAI is option B. Okay, as per my view, the answer should be option D. Next, fifth MCQ. Under which of the section of Competition Act 2002 Mr. Vikas can approach to Competition Commission of India against DRPL? Basically, Mr. Vikas has produced a movie by name, there is some name to the movie produced by Mr. Vikas. Now this movie which has been produced by Mr. Vikas is also to be going to be released on the same date on which Love Tales of DRPL is to be released, that is 14th February. Now DRPL has entered into a vertical anti-competitive agreement with the theater owners, okay, exhibitors, stating that you have to purchase exhibition rights of both hero number 1 and this Love Tales. Thereby DRPL is not allowing Mr. Vikas to release his movie. Thereby Mr. Vikas wants to approach Competition Commission of India against DRPL. Now under which section Mr. Vikas can approach Competition Commission of India? If you see, under section 3 subsection 4, Mr. Vikas can approach saying that DRPL has entered into on anti-competitive agreement. Sorry, my nose is having some trouble, so my voice might not be clear. Please adjust with this. Or second option, under section 4, where he can approach Competition Commission of India saying that DRPL is enjoying dominant position and it is also abusing its dominant position. He can approach even under section 4 also. And under section 19, he can approach Competition Commission of India asking to conduct a inquiry on DRPL. Okay, thereby correct option would be D. Under all of the above sections, Mr. Vikas can approach Competition Commission of India against DRPL. Next, descriptive questions. Evaluate the legal validity of both the transactions regarding Panwell Farmhouse. If the transactions are valid, justify with reasons. If not, then suggest what could be the proper course of action. Basically what happens is, Mr. Vikas is there na, our hero. He purchased a farmhouse in the name of his mother. Consideration is paid by Mr. Vikas from the known sources only. Now if he purchases the property in his mother's name, it should be in the joint name. Okay, but he purchases in the sole name of his mother. Therefore this transaction would be Benami transaction. Hope that is clear. Instead, what he should have done is he should have purchased this farmhouse in his name. After purchasing, he should have executed a gift deed to his mother to his mother. Okay, in that case the transaction would not be a Benami transaction, but now it is a Benami transaction. Next, is Vikas Kapoor guilty of an offence under Prevention of Money Laundering Act 2002? Explain. Basically what happens is, this Mr. Vikas Kapoor goes to some foreign for shoot purpose. Okay, from there he brings some earrings and some silver rose, like this, some various items he brings to India. Now, since he brought all those items, it has exceeded the threshold limit, thereby he has to pay the duty on these items. The custom duty has to be paid, and thereby he has to walk through the red channel in the airport, but he walked through green channel. Okay, now whether he has committed any offense of money laundering or not, the answer is yes. Okay, he has evaded the duty to be paid under Customs Act, thereby he has committed an offense of money laundering. Okay, next, VFPL has reported DRPL for contravention of provisions of Competition Act 2002. Please examine the case and elaborate your findings in terms of the said act. See, basically VFPL has approached Competition Commission of India against DRPL under section 3, under section 4, therefore it is valid. Okay, under section 4, under section 3, it has approached saying that DRPL has entered into anti-competitive agreement. Basically it has entered into tie-in agreement, which is an anti-competitive, and also under section 4 it has abused its dominant position. Okay, therefore VFPL approaching Competition Commission of India against DRPL is valid. By this we have completed case study number 14.